All right, I thought I'd give you a little, just an in-depth explanation of my trading strategy, and also show you how to set up the chart, as well as some places that you can go to get the tools that I'm using for trading. But let's get started. I've already opened up. Let me get this off. Yeah, great way to start the video there. All right. It's my desktop. I've already started. Let's see. I've already opened up NinjaTrader here. So let's just go with a new chart here. Chart. Click on that and chart. I always trade the MNQ. And I use a tick chart, and I do 450 ticks. And let's see here. I've created a template. I call it naked. Well, actually, we'll start with the naked chart, so I can show you what we're doing here. And go to OK. So here's my chart, 450 tick chart. That's what it looks like without any indicators on it. So let's zoom this in a little bit. So I'll show you what indicators I'm using, and then I'll explain to you kind of the process, or my thought process, as I'm trading, or what the method that I use to trade. So we'll go here to let me make sure. I need to see. Well, I can't tell. Hopefully my face is out of the way. But I'll go up here to, actually, let me just right click here to indicators, and let's start with the EMAs. And my first one is going to be a 100 EMA. We'll apply that. I don't like that color. Let's change the color down here to, let's go with the dim gray. Apply. Then we will go to another one. I use the 50 EMA. 50. I don't like the color of that. Let's go with a, what color do I want? I can't see with this camera right in the way. There's my steel blue. Apply. And another one is the 20 EMA. Oh, whoops, I don't want that color either. Let's change the color on that 20 EMA. Let's see if this will show up. Yeah. Those are the colors I like. I like that white background. So that is the that's the EMAs. Next, let's add this. Right click on the screen, back to indicators, and we are going to add swings. Apply. And I think I usually have this on 3. Let me see what that does. Yeah. I usually have that on 3 because that's a little more aggressive. And I think what that means is takes 3 bars for it to print at least. You have to have at least 3 bars per swing for it to print. So here, 1, 2, 3, 4, and then it printed. Otherwise, if it was 5, let's see, look, it wouldn't have printed that because you need at least 5 bars per swing before it breaks again for it to print, if that makes sense. Hopefully that makes sense. But anyways, I like 3. And I'm going to change the colors on these. Let's see. Swing high, I like to be green. I'll go with maybe a lime green. And I like these to not be so wide. So we'll go with that. And let's see if we can make these align. What will that do? No. Never mind. Let's just, okay. Let's just go back to dot. Okay. And for the swing low, I like to have it red. So let's do that. Change that to 1. Apply. So this is the absolute bare bones that I would have on my chart. These are free indicators. So you could trade this strategy as is. So yeah, you could trade as is, just like this. You would need to put your chart indicator on, or your chart. Where is that? Can I right click on that? Well, I hope my face is out of the way. You'd put your chart trader on right here, and then you could activate. You could buy and sell from there. I use what's the name of it? Let me see here. Let me show you. I'll try to have a link below here. In fact, I'm going to try to get an affiliate link. So the link that I put in the description, please use that link. I might get paid a little bit on that if you choose to get these indicators. But it's called Arc AI. Arc AI is the website. You can just Google that. But anyways, I'm going to show you this indicator, and this, I'm telling you, this is the best indicator that you will ever use, and I will show you why. Let's see if I can find it, because I can't remember the name of it right now. Oh man, I should have had this prepared before I started the video. Easy Trader. Easy Trader right here. The best indicator on the market, bar none. Because what this indicator does is it allows you to manage your money properly. You can put, I always put like a dollar amount, a fixed dollar amount. And it helps me trade and helps me manage my money. So I'll click on here, dollar value. I usually trade a 50K account with Apex funding, which again I will give I will put a link below the video to Apex funding. I never trade my own money. I use their money. And I advise you to do the same. And they usually always have deals and stuff, so it's always a good deal. So anyways, I usually put about a 30 tick stop. And why isn't this working? Oh, it's probably because I'm not hooked up to any account. But anyways, you get the idea here. I'll probably have to do a video just on that. But again, best indicator out there. The other indicator I use from them is Unizones. Now, I don't know if it'll show up because I have not connected to my account, but it is right here. Let's see if it shows up. And I may connect to my account. I just didn't because I'll get distracted looking at the market and I'll want to trade if I see a trade. Where are you? Unizones. Oh, right there. Apply. Yep, good. They showed up. Excellent. These are great. These are order blocks. These show where the most orders have been taken. Let me move this camera out of the way so I can adjust this. I usually take off fresh zones and I take the zigzags off on that. So here's my chart. Again, you can trade this without these indicators. They are expensive indicators, but they work, man. I mean, they're really invaluable, and I'd highly recommend biting the bullet and getting them if you're serious about trading. Okay, so let me just dive in real quick and show you what I look at when I'm trading. First of all, the 100 EMA is my main EMA that I'm looking at when I'm trading. Typically, now there are some exceptions to every rule, obviously, but typically, I am only going short when I am underneath the 100 EMA, and I am only going long when I am above the 100 EMA. So a super simple strategy, which should show you profit, is anytime, here's an example over here. Anytime these bars start closing below the 100 EMA, which is right here, and we get a bar that closes right below that. Now see, this isn't really a good example because this bar did not close here. I'm looking for the first swing below the 100 EMA, which would have been right here. This bar right here did not close underneath that swing, so I wouldn't have taken this trade. If you were aggressive, you could have went ahead with the next bar and taken it because it did close. But I'm looking for this bar. If it touches that swing, it has to close below it before I take a trade. Here's an example of one that did close. I wouldn't have taken this trade because that bar is so long and the stop is far away, because I will get into this trade. Let me just show you this with my drawing tool. Right here, I always set my stop loss above the last swing, about a tick or two, and that's just a long ways away, and it would have had to go. It eventually did, but it would have stopped me out. You see here, anytime there's a big bar like that, I try to stay away from, just because they usually retract and go the opposite way. So that is a trade I would have stayed away from. Let's see, there's no trades here. That might have been a trade there, but again, look at the stop loss, would have been way up here. It would eventually have won, but I wouldn't have taken that trade. And another thing is, well, hold on, let me just go back here to where this actually triggered. So the market's going up for a while, and it begins to come back down. I am in this area. I'm looking to go long if I'm doing anything, but I wouldn't go long until this actually went back and tapped this 100 EMA. and then it would have had to go up and break this for me to go long. That's when I start over. And I'm only looking to take 1 to 2 trades above or below the 100 EMA. And I'll show you what I mean here. So we're going up. It begins to come back down. It starts closing here below the 100 EMA. So now I'm looking to go short. This candle does not close below this first swing. This candle does not close below this first swing. This candle is the first one that closes below the swing on this section of my trading here. This break of the EMA, the first break of the 100 EMA. This is the first one that closes below my swing point. So let's just look at this. This might have been a tricky trade because I'm looking at these unizones, these zones right here. I don't typically like going right into those, but as you can see here, this would have eventually won. Okay. No, it would have won right here. This is where it would have won. 1-to-1 ratio is what I'm looking for. So that would have won. Now, since we were way below this, I am not going to take this trade way down here. This would have been the second one. I usually look for 2 trades above or below the 100 EMA. And I probably wouldn't have taken this one just because, look at this, it's way away from the 100 EMA. That is eventually going to go up and tap that again. So what I would do is I would wait before I take another trade going short. I would wait for it to go back up to this 100 EMA and tap that, which it does here. And then I would look for it to break below a swing point, which it did right here. So as you can see right here, I get in here, I set my stop loss up here, and look, it's another win right there. Okay, so I wait for my second one. Actually, this would be the first one because it went up and it hit that EMA again. I wouldn't have taken this because the stop loss is too big. But anyways, you can kind of get the idea there of what I'm doing. Hopefully that explains a little better of how I trade. And again, bar none, the best trading strategy out there. I mean, it works. It's simple. The best thing you can do in trading is keep it simple. You could have a horrible trading strategy, but if you have great money management, it can work for you. But this is a great strategy coupled with a great tool for money management. It's just good. Real quick, another thing, these unizones. I typically don't like trading into these unizones, and I really, really love trading when it bounces off these unizones, especially here. You have a double top hitting this zone here. So that may have been a trade I would have taken, even though it had this little, that's the horrible candle right there, price action. But even though it didn't break here, I may have taken that on that second candle entry there because it was just a great place to take a trade. And as you can see, the market went just tanked from there. And I like 1-to-1 ratios. I've tried, risking 1 and trying to go for that 2 ratio. And your win rate's not as high. And I just think the 1-to-1 is just better. It's for your psychology. You're winning more trades. And anyway, that's it, man. I hope if this was valuable to you, like and subscribe to this channel, hopefully we'll be spitting out some content in the future. Have a great day. God bless.